Welcome back to the channel. Listen, if you're paying close attention, you're seeing all of these CEOs and representatives of companies coming out one by one every week. And it's very interesting how they do it. But they're coming out and they're talking about how something, let's say instant payments, DLT, how they're intertwined with the advancement of the business, B2B payments of all kinds. One time they talked about payroll. You have this happening again, right? So this article here is titled Instant Payments Rewrite Treasury Playbooks. And I'll read this little tidbit to you. It says, instant payments are set to disrupt B2B transactions as businesses adapt around their speed. I like how they phrase that because for the first time, sometimes they're very specific, which when you're being very acute with what you're saying, then we have to look at a specific flow of value. Right. So that sort of whittles down the value that we're talking about. Let's say you're talking just about payroll, then we have to look at the values moving through payroll. We're talking about B2B payments, then we have to look at that. This is B2B transactions in general, which is what I've been saying all along. Don't worry, we have some great articles coming up right after this one. This is not the only big one that was released today, but this is B2B overall. Folks, we're talking trillions of dollars. We've read maybe 3 articles in the last 2 to 3 months where they admit they're behind the technology. They admit that they need DLT. One, they need instant payments. They need to solve the problem of siloing. They need global reach. They've spoken about all of this. But let's continue on here. It says, WEX president of corporate payments, Eric Frankovich, writes in the new payments ebook. Okay, so now let's go here. Let me pull up some more information. We're going to go a little bit deeper on what Frankovich believes because I looked it up. So, according to Eric Frankovich, president of corporate payments at WEX, instant payments are poised to significantly rewrite Treasury playbook. So what does that mean? When you think of Treasury, what do you think about? Is there consistent value there? Some going in, some coming out, some being held? It's a Treasury. What are all the different aspects that comprise what is thought of to be a treasury? See, when you start thinking in that way, now you start crunching some numbers and you start saying to yourself, well, which native tokens are involved in treasuries? XRP, Solana, Bitcoin. There's a few. What was mentioned in the digital asset stockpile? Those, I'll say this. The ones that they mentioned that they're thinking about in the U.S. for the digital asset stockpile, I keep my eye on. The ones that the World Economic Forum, when they were at the peak of their power years ago, that they mentioned, I would keep my eye on those as well. Let's keep going here. Let's keep going. So significantly rewrite playbooks by ushering in a new era of speed. All right, well, if we're talking speed, what did David Schwartz and other experts that deal with XRPL, what did they say was the fastest? XRP. It wasn't RLUSD, it was XRP. I have something I'm going to show you. Just wait. Like I said, there's an article coming up and I need to, let me move it because I want that one to support what we're reading right here. I want to show you. Okay, but let's keep going. We got to go a little further with this one. Once again, if you like this type of content, take those powerful hands of yours. I know you're powerful. Take one of those powerful fingers and boom, boom, and hit that like button. All right. If you like this style of content, I definitely would appreciate it. It continues. Transparency. What offers you traceability? We've known this for years. XRP. Certain mechanisms are built for XRP on the XRPL. You can only use XRP. Those who have actually read these different documents on xrpl.org, they know. And they screenshot it and they saved it. So there's no getting around the truth. That's just the truth. If that's not prime utility, I don't know what is. It's me. So transparency, XRP, and control as the norm rather than the exception. It says here's a breakdown of how he sees disruption unfolding. He talks about real-time cash flow management. The ability to send and receive funds instantly allows businesses, once again, trillions of dollars, folks. We got an update. I can't remember the agency or the company, but this was about maybe 2-3 weeks ago, if you remember. And they were talking about how they showed evidence that even as of now, Some payments are still going missing. Some payments are taking 2 to 3 days, sometimes even weeks to this day. Another aspect of that, once again, these companies never updated to the legacy system offering. So what are they waiting on? They're clearly not waiting on that, or they would have integrated already with them. No, they're waiting on DLT. DLT frees them up to do what they always wanted to do. Have global reach and play with value in a way they never were able to do before, and reallocate value in a way that they were never able to do before. Let's keep going. So they want to the ability to send and receive funds instantly, allowing businesses to manage cash flow with unprecedented immediacy, reduce supplier friction. Faster payments can strengthen supplier relationships by reducing payment delays and improving cash flow for vendors. And once you have payments going back and forth, you have traceability, no payments are going missing, people are getting their money quicker, they're going to be happier. And once they're happier, what happens? They're going to want to do more business. We've all seen this throughout our lives. You do some good business and the people are very happy. They're satisfied. Sometimes they're even giggling, which is an interesting phenomenon. They're so happy about the value they made. They're laughing and just visibly giddy. Instantly, they're talking about, let's do more business. They're handing you their business cards. If it happens, if we've experienced that, and we definitely have, they definitely experience that, only on a much larger scale. That's a lot of value coming into XRP. How does it stay below $10? It does not stay below $10. In my humble opinion, you make your own mind up. To each his own. It's just my humble opinion, not financial advice. Let's continue on. Evolution of digital wallets in corporate space. Ripple has been talking about digital wallets. Every major Bankcoin company has been talking about digital wallets. They understand that how that weaves them into their system, the lifeblood of those systems. And once you're into the lifeblood of those systems, the lifeblood of a bank or any of these big businesses, you're there. So I'm going to say semi-permanently. I don't want to say permanently because change is the only constant. But the long period of time that they will be in that system, so much value will flow through them that whatever the prices are today of those native tokens, it will not be that in the future. There's no way. Once you have, let's say you have XRPL moving value for banks, whether they're on a private ledger or not, it makes no difference to an XRP holder. David Schwartz already told everybody there cannot be two XRP prices. So whether they're using a private ledger on the XRPL or the public ledger, which they'll use probably a combination, is going to affect that XRP price. Why do I say they'll probably use a combination? Because we saw central banks testing that out recently. That was widely publicized. They have their private ledger, but they're also, and I'm not sure if it was the XRPL, but it doesn't make a difference. It was on some bank coin, but I believe it was the XRPL. But look into that for yourself. I know a lot of you probably remember because that was recent. But they use both. They use both. They're going to use both. There's advantages to having the ability to use both. But let's continue on here. So they want to lock in that value with something like digital wallets. Every employee is going to need a digital wallet, right? Then that helps with payroll, which will also be on the chain. Makes perfect sense. Now you have a huge amount of value consistently flowing through these Bankcoin companies. Or if you want to be specific, let's say XRPL or Quant or Stellar or Solana, whatever, whichever one you choose. Everybody is into something different. But it's the same potentiality. Now let's go here. Virtual cards. And that's another thing I wanted to say. You see how even the states, look, I'm gonna, and I probably should have made a separate video for this. There's something strange going on right now, in my humble opinion, in the United States. There's a lot of states that are doing this digital ID thing. How do you do that with the legacy system offering? I just don't see that being sustainable. And they're doing it this year. That's another thing. They're doing this year while DLT is being rolled out, the new financial system being unleashed. The only way that you have immutability of those things or protect them majorly from what has been happening a lot lately, where certain bad actors get into a system and they just take everything and put it out on the internet. The only way you do that is through an advanced DLT system. Advanced DLT system with advanced AI to protect it. That's the only way I see that possible. So that's something else I'm keeping my eye on. But The point of that is, if states begin to use the DLT systems, which I believe that they will, and the reason I say that is, if you remember years ago, you had cities like New York test out their own digital currencies. Remember that? You had cities like Miami test out their digital currencies. So this has been going on for a long time. So cities and states are not strangers to the new financial system. As a matter of fact, I think that they're going to be some of the fastest to adopt the technology. Then not only do they need the technology, and they want to cut costs, right? They will definitely want to cut costs. It's going to please their people that they supposedly serve, and they want a little extra in their paycheck. Let's just be real, they do. They're constantly giving themselves a raise, right? They may not fix your potholes, but they're going to give themselves a raise. All right, but that's hilarious. It's true. So they want to cut costs for a variety of reasons. That's one aspect of their usage of that. Then on top of that, I'm trying not to forget. I have so much I'm trying to remember. Bear with me. I had the thought right there, and it's just fizzled out. So we're talking about them using it for, the treasuries. Oh man, I feel so good. I remember that, folks. Thank you for hanging in there with me. The treasuries. They're all going to want the treasuries. Right now, there's a big tussle between the federal government and a lot of the states for federal funding. Federal funding, a lot of times it can either free you or be a mechanism of control. So states are sort of resisting that. So their federal funding, a lot of that's going to be cut. They need a new revenue stream to be able to play with, to do certain things with. What they're going to do with it, I don't know. But I believe that's one of the reasons that they're looking at treasuries. Right? Or not treasuries. I shouldn't phrase it like that. They're calling them digital asset stockpiles. Does the verbiage really matter? Does the nomenclature really matter? As long as we understand what it's conveying, but you understand what I mean. So I think that that's going to be a huge aspect that a lot of people are not looking at. States. But when you're thinking about digital wallets and you're thinking about businesses, also think states. Virtual cards, same thing. Payroll, same thing. Only a little bit more consistently out of the states. We'll see. We'll see. I think the bigger money obviously is going to come from businesses. We're talking trillions of dollars globally. These businesses are struggling. Even if they're big, even if they say they saw a profit, look at the internals of what's going on. They need more transparency. They lack global reach that they desire. Every business wants to grow if they're actually a successful business, and they find themselves severely limited. They want to tap into resources, but a lot of those resources go missing. How do you keep up with that? You can do that all on the same chain. You can do payroll. You can do B2B payments. You can do traceability, all on XRPL as an example, all on Algorand as an example. And they know that. So I would keep an close eye on the movement of what these businesses are doing. Whatever we're seeing right now is nothing compared to what is to come in the future. It can't be. There's no way. If these catalysts are actuated upon, there's no way that this time period compares to what is to come. All right. So you have that. I'm going to leave that there, but I want to show you this next article, sort of back up what I'm talking about. We've been saying this for a long time, but now you have these big timers coming out and saying it. Haven't I been talking about the bridge currency aspect? We heard the ECB talk about siloing. We heard another regulator talk about siloing and fragmentation, especially the ones who evaluate the problems that banks are having. We heard them talk about fragmentation, didn't we? Recently, yes, we did. So we've been current with the idea of liquidity, tokens, and it's serving that function, and then also bridge currencies, because you're going to need a neutral platform for, the East to do business with the West to do business with the East. There's conflict everywhere, and it seems as though right now that stuff is only growing. All right, unfortunate, but that's the nature of what's going on right now. So you need a bridge currency so that the U.S. dollar can run into XRP, borrow that liquidity and speed, and comes out on the other side, renminbi or yuan or whatever other currency, pound. That's the function that XRP serves, one of the major ones that's going to move a lot of value, and they're going to need it. It says here, this article is titled, XRP as the world's leading bridge currency. This is coming from a German VC CEO who is going over the possibilities. It says XRP's potential role as the world's leading bridge currency is now in the spotlight following remarks from a prominent European venture capitalist, Oliver Mickel, Chief Executive Officer, CEO of Germany-based Tokentis Investment AG. This individual has expressed strong confidence in the ability of crypto payment company Ripple to underpin the global financial system as central banks race to launch digital currencies. Yes, and as much as their technologies are siloed, they're going to need something to connect it all together. So then it says this next part, let's give credit where credit is due. It says in a video interview shared on X social media by crypto analyst Jack the Rippler, who's a veteran in crypto, been around for a long time, as far as I remember, Mickel shed light on Ripple's strategic role in the evolving global finance system. Well, yeah, they have all the connections for the collection. All the connections for the collection. What are they collecting? Value, power. I told people in one of the videos recently, they remind me of a new, more powerful, roided like steroids, roided up IMF. They do. Only they work in sort of the opposite way. Instead of trying to constrain and control countries and businesses with what they offer, they're gaining power by setting them free. They go in the opposite direction. That gray hair right there. Right there. That thing just pokes out in my mind. It's like, is there something on my nose? Like, no, I'm still getting used to it. You're like, man, I'm getting used to it as well. I know. We'll get there. But when I see it, I'm like, wait, is there something on my nose? No, there is, but there isn't, you know? Anyway, it says designed to facilitate fast, low-cost cross-border payments. XRP has long been positioned as a neutral settlement asset capable of linking various fiat and digital currencies. Folks, there's such a problem right now with the legacy financial system. And it's so funny what's going on with Jerome Powell, et cetera, and his positioning and interest rates, et cetera. And we were just talking about that, weren't we? That's always strange to me. I talk about something and then you see some activities happening. Right now, it looks like the ship has two holes in it. And no matter which way they lean, the ship is sinking. They have to patch it up. They have to replace the ship with the new financial system, replace the legacy system with the new financial system. This is why you saw the Fed experimenting with a lot of DLT technology. They've been working with Ripple for a long time. They also have worked with Stellar. They also have worked with, vicariously through Maiden Labs and MIT. They also have a connection to Algorand. This has been for years. Who knows what they're doing behind the scenes? There's no way that the government doesn't utilize the opportunity to have the absolute best of these technologies. And I honestly believe that there's no way they haven't worked on a system that is superior to what we see, but built on top of the system that everyone's going to be using, including businesses. But for the government, they probably have something that is a private ledger, but it is much, much better than what we know, to keep it simple. That's going to be interesting to see as time goes on. Over the years, is there talks of private contracts, military contracts? We'll see. I've talked about that before. It says Mickel argues that as central banks accelerate efforts to implement central bank digital currencies amid increasing urgency to stabilize economic systems, the world may have no choice but to rely on existing blockchain infrastructures like Ripple. Yes, I'll also say this. They will need a layer of trust. I'll call it a trust layer between the CBDCs that central banks are issuing and its interaction and how that interaction is governed between them and the commercial banks that use them. The commercial banks do not want the possibility of central banks taking their deposits or people dealing with central banks directly and not having to go through the commercial banks. Hence why the commercial banks were asking them, hey, listen, are you going to step on our toes? We don't want you stepping on our toes, because then that's going to make us not support this technology. Central bank said, no, we're not going to do that. Although last year they considered it, at least in the European Union. If the European Union was considering that as a possibility of dealing with customers directly, which is unbelievable that they would. That was a huge stab in the back, in my humble opinion. That was in a document. I don't write the documents. We just read them. We just study them here. That was unbelievable to even put out there and take that chance of upsetting the commercial banks. But if they're thinking it, I'm going to go out on a limb and believe that a lot of minds in the U.S. probably think the same way. All of these companies, whether they're central banks or not, they all want power. They all want to advance themselves. So that's definitely a possibility of them stepping on the commercial banks. So, but to negate that, I would think the commercial banks will reasonably request that there be some sort of layer in between here, or some sort of mechanism that ensures that customers have to deal with the commercial banks. And the central banks will have to assure the commercial banks that, yes, this mechanism is always going to be in place, and there's no override mechanism or circumstance where they would feel they need to override that aspect. So that's another part that the XRPL can play for sure. And I think that's one of the reasons why you've heard Ripple discuss AI before. Smart contracts and AI could control that relationship there between the central banks and the commercial banks, which is a very tumultuous relationship, to say the least, right? It says the world may have no choice but to rely on existing blockchain infrastructures like Ripple. Well, these are the superior systems. It makes it sound as though they're like some basic systems. These are the advanced systems. They've been advancing all these years. It says currently Ripple offers the necessary framework to facilitate seamless cross-border payments. Okay, that we know. All right. The perspective aligns with Ripple's long-standing ambition to replace SWIFT. No, they don't. Listen, can they replace SWIFT? Yes, I do believe that. Do they need to? No. They need to work with SWIFT. They need to absorb SWIFT. Let SWIFT feed you their information. Let SWIFT use their connections. Let SWIFT build a relationship with you. And then you easily absorb them. They will dissolve into you, as opposed to having this war, this battle that could pop off if you just say, hey, we're going to replace them. That sounds good. But there's a much better chess game that can be played. And if that happens, well, if they integrate with SWIFT, if they work with SWIFT, SWIFT waves the white flag, which is, it looks like that's what they've been doing, in my humble opinion. They're even working with Chainlink already. We're going to learn a lot with this deadline that's coming up for SWIFT, okay, and a lot of the banks that deal with them. But if they do take over SWIFT, or move any percentage of value for SWIFT. Let me be a little bit more reasonable, because some people may say, well, they probably only move a little bit of value for SWIFT. Even if you take that perspective, that positioning, the price of XRP will be astronomical. The price of Chainlink, we'll see what part that plays. They're already working with them. We'll see how that plays out into the future. Will be astronomical. Even if it moves a smaller percentage, like they've been talking about, 7%. Ripple says 14% that they're looking to do, which I believe is a lowball number. The price will be astronomical, and you need XRP to do that. No doubt about it. If you read the article that we went over the other day, they outlined every way that stable coins are weak and susceptible to bank runs. Folks, nobody wants to be susceptible to bank runs. It increases their susceptibility to bank runs. Who wants to be susceptible? Come on now. You think that they don't have a backup plan? A backup plan is excess liquidity. XRP, XLM liquidity tokens. My humble opinion, you don't have to agree. All right, let's go here with a little bit of Bitcoin news. I'm getting back into the flow. When I take a day off or 2 days off, it always throws me off, and then I sort of have to get my flow back. I'm feeling it a little bit. This article here is titled "Bitcoin Bulls in Control." As Bitcoin price rebounds, I knew it would happen, rebounds to $118,000. All right. I feel secure with Bitcoin and what it's been doing. I said that. This is why I try not to listen to every single article writer. A lot of them were very, very shaky as of late. But Bitcoin has bounced back. Resilience, once again, the question is why? Is resilience because those businesses they haven't even begun playing yet. These are still just the little baby steps. Little introductory chess moves on the board. Move a pawn here, pawn there, knight here. That's all this is. This is not the deepness of the game just yet. They're going to run that price up. They're not here to make peanuts. And 118K, I hate to break it to a lot of people, that is peanuts. That's nothing. That's nothing. Just like whatever you see with XRP is nothing. These businesses are not here to play, and they don't think small. And they have the capital to risk. They have the capital to play with. They're here for the big moment. Everybody's getting ready for the dance. Do you have your tuxedo or dress ready? It says here, Bitcoin recovered sharply after sweeping range lows on Friday and is trying to continue its uptrend into the weekend, indicating that bulls are still in control of the market. Let's go Bulls. Data from Cointelegraph, Markets Pro, and TradingView showed daily gains surpassing 2% as BTC reached $118,300 on Bitstamp, now up $3,700 versus weekly lows seen on Friday. Bitcoin impressed traders. That's why I said I'm not worried about any of this volatility. I will start to look at Bitcoin sideways once those catalysts start being eliminated. If the catalysts or the positive catalysts are not eliminated, it continues its upward trajectory. Even if there's a dip, even if there's a correction, it continues. And we've seen it time and time again. They're proving what I'm saying correct. Not that I'm not a person where I need to be right all the time. No, I know what I see. I believe in what I see. I trust myself. All right. It says, quote, Bitcoin closed above the bullish key levels and filled the CME gap at $115,000. This is coming from popular crypto analyst Ash Crypto in an X post on Saturday. I beg your pardon. Sorry about that. It's a little dust in my throat there. A little pollen. Pollen's heavy today. Anybody else feel that? As Cointelegraph reported, Bitcoin's dropped to 115,000. Yep, that's when article writers were losing their minds. Was accompanied by the massive liquidation of over-leveraged positions, but it provided an opportunity for investors to add exposure. All right, we're going to leave off there for now, folks. Now that you have that information, what are you going to do with it? Once again, if you haven't already, take those powerful fingers, one of those powerful fingers, and hit that like button. Hit it a couple of times. I'll take it. What are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.